trading education and some really solid trade dissection and analysis, you've come to the right place. I'm Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you free education and trade analysis right here on YouTube and on X. And today we have a banger of a lesson here for you guys. I'm going to teach you how I like to watch for certain things when I want to fix a broken trade. So let me open up the charts and I'm going to explain exactly what I mean here. One quick sec, folks. Okay, so now that we are in the charts, first off, we took a couple of trades here this morning. We took one on Qs and one on SPY, both going short coming up into this level. And on Qs, we waited up into the 50 as well. There was lots of opportunity today. But on this first trade on Qs, it pushed further. So enter into here, add here, get out on the retracement. Now, I was working a bigger picture idea on this one, and I still held. Now, I was green on Qs, and I locked in a loss because I was working both trades, both SPY and Qs. And I've talked about this in my other trades. Even though it's a red trade, it doesn't matter because I then focus on the trade, on the one trade that I'm seeing the chart extremely clear. Instead of having both trades going and worrying about, trying to manage both, especially at the time because I was on mobile, because you can see my hands are covered in PVC cement, working on some water piping here on the property. So with that, I want to focus. Okay. So I'm going to bring up just SPY. So we're just basically going to talk about SPY here this evening. So let me bring up the one chart and let's talk about this trade. So this was really interesting. So we had a big gap down on Catalyst, and not to go into too much of the weeds here, but Catalyst as a technical trader, like if you consider yourself a technical trader, that's all you want. You don't want Catalyst. Catalyst can bring up a couple of different things, okay? So number one, it's going to bring in a bunch of people into the market or into a specific stock that normally don't trade it, which then causes erratic behavior, okay? Remember, everything that you see on screens, like with the chart, it's just a direct representation of human emotion on the chart. That's all it is, okay? So when you have that catalyst, you're going to have more people attacking that, and then it just becomes a little wonky. It can get a little wonky. It almost becomes like there's too many variables, right? So with that said, with the catalyst, with China unleashing this new AI platform and really hammering the American market with that, the market sold off really hard. I think at lows, it was like a 17-point gap down. So that's obviously a big gap down. A 3% gap down is a big gap down. So what we were looking for was a pop coming straight up into the gap fill. Okay, so these are the levels that I have placed prior to the market open. I have the gap fill, and then we were also watching moving averages. So on the way up, when it came into the 50 SMA, which is right here where my cursor is, that's where I started in. And you're going to see me tailing into this. You're going to see a lot of entries. What you have to remember when I'm working a trade like this, where there's catalyst, they're very small starters. And then I'm waiting for it to give me a sign. Show me exactly what it wants to do. And then I start applying my pressure and start applying my size. Okay. And that's what I did. So as it comes up into this level, pulls back. Wasn't enough of a pullback, not for what I'm looking for in this trade. I'm looking for the bigger sell-off, because what happens in this situation, and this is where experience comes in, and this is where it might get a little confusing for some, and I don't want it to be, but I'm just simply giving you my point of view and how, like, my methodology of how I trade. So traps are extremely easy to spot. When you have a day when so many new, like fresh blood, new blood, new dumb money blood comes into the market, it's very easy for smart money to take their money. Okay. Like the institutional traders, it's so easy because it's like shooting fish in a barrel, literally. So what happens here is it pops up, and then a lot of people start going long on this level because it's now remounted that major resistance now proving to be support. So that's the start of the trap. Okay, you have to understand this. The only place to properly put your money on a day like today is a pullback into the 50 SMA at a minimum, if not lower. Okay. Really, if you really want to get involved in this, you have to think from a large account perspective. Okay. Don't think from your small account perspective. And even if you got 100 grand in your account, that's a small account. It doesn't matter. It doesn't move the market. I'm talking big account shit. Okay. Big dick shit. So when you have that big account or you have a lot of money, it's very easy to set these traps. It's super easy. And it's very easy to steal from the dumb money. So the only place that the real intelligent investors or traders are going to put their money is at a minimum the 50 SMA on the daily on a pullback, which that's where it came into. And then it bounced. But there's more of a trap there. Okay. This ultimately, I'm quite surprised it didn't sell off. And if you actually zoom over to the end of the day, it only closed at highs because of the squeeze. That's it. And a lot of that has to do with traders wanting to hold, and then their broker won't allow them to hold overnight because they have too small of an account, and then it squeezes them out. That's what happened here. Okay. So going back into this, the trap has been set, and you start to see that they're really working this level. Now, only dumb money is buying that level. If you bought that level today, you're dumb money straight up. You don't want to go long on that. You need to go long lower. Have to. Okay. That's the intelligent thing to do. So, because that's where the real money is going to start pouring in. So, like I said, tons of dumb money are buying this. And then once this, and you got to remember all of this that I'm saying and talking about, I went over it and I drew it out, a bunch of levels and even arrows, what it was going to do next. And members can vouch for that. That's exactly what it did, literally tick for tick for tick for tick. It was quite a sight to see, especially for the new members that haven't seen this before. So I draw out a trend. Once it breaks that trend, it will wash, pop back up, which is this little green candle here right at my where my cursor is, and then it'll fail. It'll come down into this level, and I'm not going to take you through the steps of natural movement theory. Natural movement theory is a price action methodology that is proprietary to me and Tricktrades, and it's literally like a crystal ball. So with all of that said, it washes out. So on that, when it pops back up, okay, so when we start popping back up, this is where there is some real opportunity to correct your average, okay? And that's my last entry there. I'm looking for a bigger picture trade on this. This is why I did not pay it. Now, I didn't get it. I didn't get that bigger picture trade, and that's part of this video. It's how to correct a trade that did not go well for you, okay? Now, like I said, I got caught up on the property at the time, and I could not check my phone. I couldn't check the screens. I could have taken away a really nice big trade. Now it pops back up into this level, and right in this area is where I came back to the screens because the job that I was doing on the property took longer than expected, and I ran into some issues, which always fucking happens. I'm sure you guys can relate to that. So I missed the sell. No big deal. I'll simply watch it, and then I'll see how it's reacting. So at this time in this area where you see these entries, I'm correcting. I need to correct it because with options, number one, at that time of day, that premium was super funky, very funky. Where I should have been massively green, I wasn't. It was just flush. It was just flush. I was just break even at that point. So once I recognize that, when it pops back up, right into here, that's where I am correcting my average. Now, I needed to do that a couple of times, and this is the crucial part of this video. When you get yourself into a situation or you're in a trade that you need to correct, okay, as long as you're well within your risk parameters and you're not like super fucked up in the head and all super emotional, you can do this. Okay. Now remember, I've been doing this for 11 years. That this is just another Sunday afternoon walk is all it is. Right. So when I see that happening, I'm looking at my premium. I'm looking at basically the bid and the ask. Okay. And I'm looking to see how far of a spread there is, if there's a spread, and how it's reacting as it's coming down and coming up. And I take a mental note of that. So I know when it comes down and I'm still break even, the next time it pops up, I have to take my average. Let's say my average was $1.50. And every time it came down, it was only at $1.50. But when it came back up, it was $1.25 or sorry, 170. So I need to hammer that to correct it. And if that price is, I don't know, one, whatever, it doesn't matter. I don't want to start spitting out a bunch of fucking numbers with you guys. But all I'm doing is just correcting that average. I'm taking a mental note. Okay, it's that. I need to apply a certain amount of size to correct that average, to bring it to a proper average where I will be green the next time it pulls down to test that support, which it'll do. Okay. So you see when I enter, right? I correct. As soon as it pops back up, I'm starting to get green. This first exit here is me taking off a little bit of size, just starting to play with it. And then I enter, correct that average. I corrected it just enough, just a little bit. So I pay myself. That next entry down there, that's the true correction. So sometimes it'll take 2 kicks at the cat to get that average corrected properly, because I don't want to say you're guessing at it, but it's an educated guess as to what that average is at lows and at highs. And then you need to split the difference with how much size you have. Do you understand? Do you follow what I'm getting at? So when I do that and I notice it's like, oh shit, I'm still within about 5-10 cents of premium on this, where it's like, I need to really smack it. I need to, instead of going in with, I'll use small contract size, instead of using 10 contracts, I know I need to hit it with 15 or 20 to really correct that average. Because then the next time it pulls, I get out, I make a mint, and I'm fucking good. Okay. Because it's not doing, the trade is not doing what I wanted it to do. It should have sold off by then. It didn't. That's okay. We originally wanted the long. We just didn't capture the long. So then I have to look for a short. Okay. So for those of you that say, well, why didn't you go long? There's no fucking entry on this chart properly within an acceptable amount of risk. Even here, where are you going to risk off of? Like, you'd have to risk at these lows. Now let's check that risk. So that risk is 2 points. It's not worth it. It's not worth it. Okay. So that's why I didn't go long. That risk was skewed on it. Okay. So again, correction of average. Now, it doesn't matter if it's options or stock. You can use this method to correct a trade where it's like, I should be fucking green, but I'm not. Okay. And I know I still have 1 or 2 opportunities to correct that average and come away with a banger of a trade. I locked in $10,060 just through trade management and keeping my calm and cool in the trade. This right here is the type of stuff that I teach on a daily basis, live on screen share in Tricktrades. So if you're sick and tired of using services that are ran by a bunch of degenerate gamblers or basically kids that don't know what the fuck they're doing, and you want to learn from a true seasoned professional that can actually help you get your shit together with your trading, come to tricktrades.com. And if that's not your jam, then feel free to continue enjoying my free content right here on YouTube and on X. But you gotta make sure that you subscribe to the channel and like the video if you are already subscribed. Ain't nothing free in life, guys. Even the free stuff, you gotta subscribe and you gotta like the video. I think that's a pretty fair fucking trade. Don't be an asshole out there, folks. Come on, nobody likes an asshole. Okay, guys, I hope you had a wonderful day. Adios.